Hello everybody, my name is Kevin and I'm a CPA who owns and operates multi-seven-figure firms across Canada. Today I want to talk about the three biggest mistakes that I see CPA firms and CPAs making in my industry, which is public practice. So without further ado, number one is pricing. Yes, the dreaded pricing. And of course, as CPAs, we are not salesmen or saleswomen, we're accountants. So we don't really like to talk about pricing for some odd reason. But the bottom line is, it is brought up on a fairly consistent basis by our clients. So here's the issue with pricing. Number one, you don't want to undershoot it because that means you've left some money on the table. And number two, you don't want to overshoot it because ordinarily that results in losing the client to another firm who got it just right. So here's a couple tips for you to follow to try and button down that pricing issue. First thing I always ask a client when they're asking for a quote is I ask them, what is the scope of work? And scope of work as a CPA is you're either going to be producing notice to reader financial statements, or you're going to be producing review engagements, or you're going to be producing audited financial statements. That'll give you your starting point. Okay. With a notice to reader, if I have a client whose revenues are, let's say, $200,000 to $300,000 a year, and I'm not doing his bookkeeping, I'm simply doing a nice clean file, I know that he's going to be in around the $2,500 to $3,500 range. That's my starting point. Second thing I want to take a look at is I want to take a look at the adjusting journal entries from the prior year accountant. That's going to give me an idea of how clean the file is. If I've got a file with $200,000 to $300,000 and there's, let's say, 3 to 7 adjusting journal entries, I know I'm good. I know the file is going to be nice and clean, and I can probably bang that off pretty quick and make some good profit on that. Alternatively, if I end up getting the prior accountant's adjusting entries and it turns out he's got 15 to 20 plus entries, I know I'm probably dealing with a more challenging file, a more difficult file, so I'm going to price it accordingly. And in fact, there are some times I'm even going to double check that and see if I even want to get engaged in that kind of file. The other thing, the other variable that comes to play when pricing out a file is when does the client need it by? Has the client been requested by Canada Revenue Agency to file by a certain deadline? Is the client a multi-year filer? These are all little cues and hints that are going to allow me to properly price the file. Once I figured out all that, I can come up with a price. I mean, I'll give you an example. I had a new client who needed a review engagement. I told him it's going to run him in the neighborhood of $15,000 to $18,000. He came back. He said, "Okay, no problem. Let's go forward with it." I was 2 days into it, and I got a call from him, and he said, "Look, I need these statements ASAP because I'm going for financing, and I've got a deal that's going to fall through if I don't get the financing." And ASAP is like I need it in a couple weeks, not the usual 8 to 12 weeks it takes to complete a proper review engagement. So I explained to him, okay, if I have to get that done, if I have a week to get this done, that means I'm going to have my staff work overtime. It means I'm going to have to clear my deck of other files and bring your file on as a priority. And of course that means the price goes up. And at the end of the day, he said, yeah, sure, whatever, I just need it done. So bottom line is, we did get his file done on time and accurately, and his $15,000 to $18,000 quote came up just shy of $30,000 at the end of the day. So that's where you know your pricing method has actually worked and it's worked well. Okay, so that's the issue on pricing. second mistake that I see CPAs making, and it's usually with the younger CPAs, is they overpromise and they underdeliver. And that's a tough one. I mean, look, as CPAs, we always want to make our clients happy. You know, we want to give them good news instead of bad news. But when you overpromise and underdeliver, you're doing nothing but backing yourself into a corner. And it's backed into a corner you're never going to get out of. For example, what I like to do, I like to underpromise and overdeliver. That's a win-win strategy. I'll give you an example. If I have a client that I know his file is going to take me maybe, let's say, 3 weeks, and I know my schedule's clear, I know I've got a little bit of wiggle room to squeeze his file out in 3 weeks instead of the standard 5 to 6 weeks, I don't tell the client that. If the client asks, I tell them, well, it's the usual 5 or 6 weeks. And the reason I tell them that is because you never know what might come up throughout the weeks while you're working on the file. I mean, you guys know as well as I do, you can start your Monday and have a nice, clean, fresh Monday. You're going to get all kinds of things done. And then all of a sudden you get an emergency phone call, or you have an issue that comes up with CRA, or somebody got bad news on a Friday and they're leaving it till Monday to talk to you about. There's a million things in public practice that can come up and take your nice, clean Monday and turn it into a dog's breakfast really quick. So I don't tell the client that, you know what, chances are I can get this done in 3 weeks' time. I tell the client, you know what, I'm probably looking at the usual 5 to 6 weeks. What that does for me is, number one, it takes the pressure off right off the bat. Because if I tell the client 3 weeks, the clock starts ticking the second I make that promise. And now I'm under pressure, and I've got that file living in my head for the next 3 weeks. I don't like that. So 5 to 6 weeks is the promise that I make. When week 3 comes along and I can contact the client and tell the client, hey, here it is. I've got your draft financial statements for you to take a look at. The client's thrilled, because the client, when I originally tell him 5 to 6 weeks, he doesn't even think about me until week 5, week 6, maybe even week 7. So when I contact him with week 3, all that does is that builds credibility, it builds up goodwill, and it builds up capital that I'm going to have with that client. So rather than rather than overpromise and underdeliver, you want to underpromise and overdeliver. That's the key. Okay? Now, before we get into number 3, you guys can tell I'm driving right now, and you might be wondering, what kind of car is he driving? So I'm going to move my head, and I'm hoping that you're going to be able to tell when I move my head to the side. There's going to be one clue that's going to let you know what kind of car I'm driving, okay? Here it is. You see that? It's actually, it's the F8 Tributo. And it's funny, I watch a lot of YouTube videos, and of course I watch a lot of the car commentators talking about all the different sports cars that are out there, and they did talk about the F8, and you know, the F8 got a bad rap when it first came out. Nobody found it too thrilling. They didn't say there's anything wrong with it, but you know, it's kind of a spin-off from the 488, and basically there wasn't a lot of praise for the F8. But I gotta tell you, I absolutely love this car. The performance is second to none. The driving is second to none. It's crazy. But we can save that for another video. Let's get into number 3. Number 3, the third worst mistake that a CPA can make: missing a deadline. Yeah, the dreaded missing deadline. And I'll tell you this, as you already know, I'm sure, as CPAs, we live and die by deadlines. We've got monthly deadlines, we've got weekly deadlines, we've got annual deadlines, we have deadlines that happen mid-month, we have deadlines that happen at the end of April if you're in Canada. It's crazy. We have actually February 28th deadlines. So we have got many, many, many deadlines that we have to be able to monitor and control and not let files slip through the cracks. With that said, I've been in public practice and industry for 35 years now, and I can tell you, you're going to miss a deadline whether you like it or not. I don't care what kind of systems you have in place. The time will come where you're going to miss a deadline, and when that happens, and I'm sure many of you have felt this, there's nothing that hits the pit of your stomach quicker than finding out you missed a friggin' deadline one day after, one day too late. And now from that point, you're operating in damage control, because a couple things are going to happen. Number one, you're either going to get contacted by the client who's going to confirm whether or not you made the deadline, and at that point you're going to have to confirm you missed the deadline. And you know, I was going to say, or worse yet, and really it's not even worse yet. Missing a deadline, there's no degrees of better or worse. The whole thing just sucks. Period. So the second thing that's going to happen is you are going to get the client's going to contact you with a letter that they got from CRA. I hate that. And it's CRA saying, hey, you haven't filed your corporate tax return. And then the blah, blah, you're obligated to file within a certain deadline, and so on and so forth. Because what happens when you miss a deadline? Number one, you have now chipped away at your credibility. Number two, it's going to cost you some money. Because if that client owes Revenue Canada any tax, there's going to be penalties and there's going to be interest attached to that missed filing deadline. Now, as CPAs, we're not legally bound to pay for a client's penalties or interest, even if we are the ones that miss the deadline. But I can tell you this, nothing's going to get rid of a client quicker than letting the client know, oh yeah, hey, I missed that deadline, and by the way, you owe CRA $5,000 in penalties and interest, and I'm not paying for that. The client will be gone at that point, and the client may lodge a complaint against you with your provincial association. So it's a situation that turns from bad to horrendous quite quickly. So, number one, you're going to owe some penalties and interest. Number two, you're going to kill your credibility, or at least chip away at it with your client. Number three, you're going to lose some goodwill with that client. And number four, whatever capital you may have been able to generate over the years, you're going to lose some of that capital. That's why missing deadlines, it's not going to happen often, because as CPAs, we've got software, we've got methods, procedures that help this not occur, but it still will happen, but we'll make sure it doesn't happen too often, just because of the consequences of it. So yeah, so those are the three mistakes that I see CPAs who are practicing in public practice make, not necessarily on a consistent basis, but they do make them. So thank you very much for watching, and if you have any questions, please put them in the comments. Feel free, if you have any questions that you want to talk to me directly about, feel free to hit me up, and we'll go from there, and I'll see you on the next one. Talk to you later.